Going to be achieving seamless online payment systems and optimizing the checkout. Obviously, the point of truth between the consumer and the brand is at that optimization point, and that's the bit. If you get that wrong, you've lost trust with your customers. So, are you okay there?
Yeah, I'm too close to the speaker.
Oh, okay. Is that what it is? So Ebru, you've been in the industry a good while. Tell us a little bit about you and your career before we start.
Yeah, so I've actually been in fraud and payments myself for about 14 years, and predominantly e-commerce space and fintech. Fintech is general, but e-commerce mainly, with the iGaming background. And initially, I started joining these seminars as one of the contributors, but now I'm more moderating because I feel like we're a bit seasoned as yourself. So part of the program nowadays.
And tell me, what are you hoping to achieve from your panel today?
We've got a really good panel of 5 guys today. It's quite a diverse group of e-commerce. We've got checkouts, we've got providers, we've got different industries like car charging industries, which is quite new in innovation, I suppose, in like physical technology, if that makes sense.
Yeah.
And so we're going to be having a really interesting discussion around just the customer experience and seamless payments and the checkout, I guess, the payment journey.
Okay. All right, well, I think your panel's ready. They're just getting mic'd up. So do you want to go and sit at the end? And I'll invite them down. So
thank you.
Just one more to come. Start to do the intros. Here he comes. Hello, hello, hello.
Hello, everyone. Welcome to our session today. We're going to be talking about seamless payments. I would say checkout, but I think we're going to just say payment stage because we've got car charging company with us today, which is unusual for me as well. And we've also got IKEA, which is online and offline. I really like this stage, actually. It's a nice little setup. So I'm going to let these 5 guys introduce themselves, and then we'll start with our session. Shall we go this way? Start with you. Yeah?
Hi, I'm Andre. I'm leading the payment at Volkswagen Group Charging. We are in charge of everything which is e-mobility across Europe for our volume brands plus Audi and our own brand Ellie. Beside to this, we're doing also hardware business for EV charging for house owners and also B2B business plus fleet management plus energy trading since last week.
Okay, nice.
Hi, I'm Kerry Griffiths from Zopa Bank. So Zopa is a leading UK neobank with 2 million customers, and we work on a B2B and a B2B2C basis, and we provide services to consumers such as savings, personal loans, credit cards, and retail finance.
Thank you. Hi everyone, I'm Melvin. I'm a product owner at IKEA, basically for online payments. My team specifically is responsible for the front end of the payments on our website, and we're also building a new solution to basically offer like payment services within IKEA and basically onboard all new departments on the same offer. So, yeah.
I'm Daniel Shabash from Seon. We are a global fraud provider. So in my role as strategic director of growth, I work with some of our customers like Revolut, Nubank, Wise, Molly from the Netherlands on not just providing the solution, the technology to ensure that the payments are not only seamless but secure, but we also consult our customers on how to reduce friction and introduce friction in such a dynamic way that doesn't end up churning good users.
Hi, I'm Mathieu. I work for Checkout.com. I lead the commercial team. So Checkout.com is an acquirer, issuer, and processor and gateway all around the world, from the UK, France, Hong Kong, with the US. And yeah, quick introduction, I guess.
Yeah, so thank you for all of that. We'll get started with our session. I feel like I'm the loudest of everyone. Maybe it's just me. So we want to keep the session quite interactive. I think everybody's got the app today for the ePay Summit. So if you want to send your questions through, I'll have a look at that app while we have the discussion, and we'll embed the questions into the discussion instead of a QA at the end. Okay, so we can get into it. Let's start talking about seamless payments. So we've got quite a mix today, which is quite good because we can talk about it from different angles. But in particular, Kerry, you've got a background in embedded finance, and we can just start talking about that and the checkout experience, as well as the customer requirement for such. Is that payment option? Would you consider that a payment option, embedded finance?
Yeah, so I mean, I think the interesting thing about embedded finance is that it means different things to different people at the moment. And, you know, even within embedded finance providers, it can mean slightly different things. But I suppose to us here at Zopa, it's about kind of giving merchants flexibility and portability, and really kind of looking into a merchant's different customer touch points and being able to surface a payment. And you know, we'll probably get into it later in the talk, but as we look ahead towards future technologies, where can embedded finance take us? You know, so we know that mobile commerce is kind of the primary source for shopping these days. So, you know, if you haven't got a mobile optimized solution, then you know, you might not as well be trading, right? But then you look at things like AR, you know, where is the kind of opportunity for payment there? So, you know, at the moment today, we are kind of, we appear on the checkout of merchants as just a button, which allows customers to be able to spread their payment into manageable chunks. So, you know, we'll sit nicely alongside a PayPal and a Klarna and card payments and things like that. But really, embedded finance goes a bit further than that. It's about where can we surface this payment across many different channels and touch points.
Okay, yeah. So is there something to consider around the demographic and the age groups of the customers that require these services?
I think across the board, our demographic is probably around 35 to 45. Okay. But the demographic really is determined by the merchant. You know, so if you're a fast fashion merchant, you've, you know, in the main got quite a young demographic. If you're selling high-end kitchens, then potentially, you know, because of the cost, then you're going to be more likely to be a little bit older. So for us, yeah, across the board, across our merchant base, we're between 35 and 45. And, you know, within that, what we constantly do then is kind of analyze the data that we take in. So really understanding consumer behavior, making sure that our products and services are aligned with the shifts in different consumer behavior and across the channels that they wish to shop on as well.
I mean, IKEA's got quite a big average order value, right? So you guys are using these kind of sources and different alternative methods. What are you looking at in checkout to provide a seamless experience for your customers?
Oh, it varies widely between the type of payment you make. Of course, it's completely different if you buy just a couple of small accessories or you order a complete kitchen. And we try to adopt different payment methods based on the need. So, yeah, for some of those customers would like to have financing options. For others, maybe account-to-account based payments are working a lot better. And then, of course, you have the differences between the different markets where, you know, everybody pays in a different way. So, yeah, that is something that we see actually become even fragmented a little bit more.
Okay, and what other considerations are you making at checkout when integrating new payment methods or different territories that you're entering?
I mean, overall, we see that the faster you're completing the checkout, the more successful it is. So a customer that would like to check out, the less steps they need to complete to do that. So typically the express checkout solutions are successful, but also, for example, the payment methods, when they are at the payment step itself, that it's really clear, okay, what are the different things that they have to do. And I think there, account-to-account based payments are actually really good.
So open banking and digital banking is what we call.
In particular.
Is it digital banking? Open banking, I guess, isn't it? Bank to bank.
Yeah, I would say open banking, for me, it's more like the white labeled version, but there's of course a lot of the brands that are known in the markets itself that may use the same kind of technology on the background and benefit from the same technology.
Yeah, so we keep circling back to open banking in the past few years, and it hasn't seemed to have gotten much traction. Is there like reasons why, if anyone can weigh in on that, like what's going on, who's trying to introduce open banking, and where the issues are really around adoption?
Yeah, Well, I think it's a hot topic. I've heard it a few times already here, or it's been a hot topic for 5 or 6 years in the same
Yes.
time in every panels. I think you really have to separate the different types of customers and merchants. I think if you have high ticket value in fintechs, then you're more likely to push open banking because obviously saving 20, 30 basis points is enormous for your business. If you look at retailers, if your profit margin is more towards 20, 30%, then 20 basis points of the fees of Visa, MasterCard doesn't matter. What matters is conversion rates.
Yeah.
And obviously, that's a lot of elements and issues that we see for now on open banking is how many steps does it take to do payments? You're not going to order your Deliveroo with open banking. If you have Apple Pay, Google Pay, it takes one click and then it's done. I'm sure maybe some people trying to sell to them in the room, but my point is that it has tractions with higher ticket value right now. And after you can't compare different countries. In Netherlands, they already use it. It's been years and a decade they use Ideal. Germany is Zofort and Klarna now. In the UK specifically, I think it's less than 1% of the e-commerce market, and it's not grown that much in the past few years, but it depends on the market. You look, Pix in Brazil is incredible growth. So it's very much governmental-led banking innovations.
Yeah, and we discussed this earlier in our sessions before, but about adoption into different markets, and you said that it's not something that you would consider because it actually had a security issue that even I didn't know about. I hadn't considered.
Totally. When we see our biggest business, which is charging, where we actually, in the current situation, and we are the biggest CPO or the biggest charging network provider in Europe. We cover 600K charging stations with a 6-digit number of active customers. And here the customers are variable recurring payments, so they're coming in. So basically it's totally opposite than the normal checkout, because if you see IKEA or other shops, then the customer is running through the shops, put item in the basket, and then he need a good way to fade out in the checkout process. In our setup, it is so the customer is coming in, make the onboarding process, decided a tariff, make a subscription, give us the payments, and then in the worst case, we don't see him for 6 months because he's a house owner and charge the car at home. But then in the summertime, he's grabbing mother-in-law, kids, dog and wife, and going to Spain, and then everything has to run. And in that case, open banking isn't the right payment because only the first transaction is secure, but every following transaction use the SEPA way, which is too risky for us because in the normal SEPA region, I don't know, in UK maybe the same or some way around, but normal SEPA way is you can release a chargeback for 30 months. Yeah. That isn't, that is a high challenge for us in that case. So opposite, in our shops could be a good option for e-commerce, single transaction, open banking account to account, highly welcome, but not for the charging business.
So Daniel, talk to us a bit about what your merchants are asking you these days and what challenges are you helping them with?
Yeah, this is an interesting topic because what you guys are facing is different from a checkout experience because we are talking about instant payments, right? But it's not an instant redemption of goods, right? Like I can order from IKEA, but my new kitchen is not going to show up immediately. So you actually have a fair amount of time to intercept the transaction, whereas you guys, with your model, not only do you not have that, but there is also an extended period of time where you are still vulnerable, right? And it's interesting because top of mind for me from a fraud perspective would be how do I lose the most amount of money, right? How do I lose the most amount of value? But for the last about 4 weeks, I've actually been stateside, and I've had, honestly, the most infuriating e-commerce experience of my life. So it sort of reminded me that, like, okay, cool, like, if we all do our jobs well, maybe this will be slightly less infuriating, because I wanted to make a relatively small purchase, about 120 quid. And I've tried to buy from 3 different merchants, and they all had Shopify integration. So I was like, hey, I know these. I know what to expect. And each and every time the payment went through, after which I received an email, because whatever fraud and risk provider and merchant monitoring tool they were using flagged that I'm trying to make a purchase to an American address from a European card. And they sent me an email, and the first email just said, hey, can you send us a photo of your ID? And my immediate response was, how about no? Because I really don't want to do that by any email. Like, if you have a reputable provider for that, I would love to. The second email just said, we refunded you. The third email was very apologetic. They were very nice, but still the same thing, refunded. So basically, I sat there for like a week and a half. And at that point, I was doing the math of like, OK, if I find a fourth provider, am I going to get it in time before I leave the US? And that reminded me that this is an incredibly disconnected experience. The payment side, entirely frictionless, right? Like, I put it in my cart, I checked out, I was done. 20-second stops. For me to actually receive my item, massively convoluted, to the point where it was really as simple as they were trying to look at maybe a grand total of 5 data points they couldn't reconcile to. So they were like, OK, this is high risk. It's a little bit ridiculous, right? Because, again, we talk about instant payments, we talk about instant processing of fraud and risk signals, but what a lot of people in this industry often mean is we are in real time comparing static databases. So we might be comparing data points that have been set in the same database for 2 years, might have been updated 2 minutes ago, I will never know. So ultimately, it's instant processing, but it's actually outdated data, right? So I think that brings an interesting dimension to everything from open banking to pay by bank to various other solutions in the market in terms of how are you actually managing that risk? Like, are you still relying on, are you trying to invoke historical behavior to predict future risk? Are you trying to, essentially introduce friction just to make sure that there is no risk there for yourself? So long story short, if you go from Europe to the US, don't try to order from Shopify e-commerce shops. And in addition to that, I think it was sort of an interesting lesson to me, right, in terms of how this balance works. Because, as a fraud provider, like, we are on Shopify. Like, I'm sure some of you guys are available through some level of Shopify integration. And yet, clearly, the most widely adopted shops, and these reputable shops, small but reputable shops, will just go for whatever is most convenient to deal with the consequences later. And that's ultimately a very bad experience for the end user.
Okay, yep. So how much is seamless sort of the point where you have to collect data, right? So where's the balance in that? What considerations some of you guys are making around actually providing a seamless service, which kind of seems like a one-click and checkout, but then, there's a need for data collection. How much data collection are you sort of sacrificing the seamlessness for, I guess? It could be any one of you.
I think we have to separate seamless and the regulations that we have to work with, because obviously with PSD2, with PSD3 coming, and 3DS, SCA, TRA, there's a lot of things happening.
PSD3 coming, is that right? Yeah.
Yeah,
okay.
There's, I think,
more dimensions.
In Europe, seamless checkout is probably not like it's hard. And then I don't
it's
think
not really desired either. I don't think customers want it so much.
No, because I'm French, and like in France, people prefer doing 3DS. So you actually have a better acceptance rate pushing 3DS secure than non-3DS, because people are more used to it, and they're like, oh, this website seems legit because I get redirected to my bank. And therefore, if my bank says it's okay, then I'm okay with it. So I think every country is very different. So the US is a very different market, especially with fraud, compared to Europe, where you have way less fraud compared to the US. So I think seamless checkout is until you click the button pay, then is how do you optimize as a B2C brand to reach to the fastest point to pay. After that, it's complicated for companies to hold it. It's like, do you take more liability shift, and therefore how much is your fraud, how much data you give to your fraud provider. So I think it's a middle ground you have to do with friendly fraud, and we've seen the fraud has increased every year since 2019, and it's complicated for merchants to find the right balance, especially on high ATVs.
But I think fraud sort of increases in numbers, not in percentages, just because a lot of things have gone online, right? So I think the percentages are quite low still because there's not a lot of tolerance for high percentage of fraud. So we're just seeing a lot of diverse range of fraud, especially with new providers coming in because, charging your car wasn't exactly a market before. So what kind of fraud are you guys seeing? Because I would have thought having my car would prevent me from committing card fraud, right? Isn't that something that people consider?
More or less, when we're talking about plug and charge or in-car payments, then yes.
Yeah.
But if we're talking about app business, which is related to your account done, then we are in a way of challenging high sophisticated fraud attacks at
What
the
kind?
moment. In our special case, it is so that customer or potentially fraudsters onboard in our system with one-time credit cards, virtual one-time credit cards from Revolut or other companies. And that's a highly risky fraud detection to the charging service, because in the moment the customer is onboarding, the virtual credit card is there and we can charge them. But then a week later, he's charging and we send the capture and the capture failed in that case, because we're sending an MIT. We don't sending, in a worst case, the CIT. 25% of our customers are using the app to authenticate on a charging point. That makes the life easier for us because we know you are already there, and then we can send a CIT with a reservation potentially to credit card or to PayPal. But if the customer uses an RFID card, which is a simple plastic card with NFC connection to the charging points, we don't know that he is there. We have to wait in that kind of situation that the CPO, who is owning the charging point, let us know our customer was there and he needs money for the energy. And in that case, if that is a fraudster, then the capture could be potentially failed. And we have to work it out, how we change the KYC process, how we change the risk and fraud processes, how we change the capture processes, for example, how we do this with the monthly subscription. Did we cover on the first day of the month or 15 days of the month? How we often we let the customer run into 3DS or something like that. And in that case, the life was for me as a payment guy much more easier in the e-commerce world. And at the moment, we only need to find out the solution that we don't have to be faster than the line. We just have to be faster than our competitor, because the line is catching him and not us. So most of the charging guys, also BMW or Mercedes, do the same. They capture once a month. So we will change our capture solution to the charging session, to close to the charging session, to reduce our risk.
And this is something you guys help with different industries and the different fraud that's coming up, because I think fraud is getting very sophisticated, which actually makes some payment methods more preferable than others, isn't it? Because cards are becoming quite an easy one to exploit. And so what are solutions in terms of embedded finance? Is that fraud free or like?
So no, we see an amount of fraud. We're fairly good at spotting fraud and kind of mitigating against fraud. So as an embedded finance provider, we take the fraud risk for the merchant. So for that reason, we've got to have certain guardrails in place to protect our business. And we kind of see a mix of, if you read kind of fraud white papers, you'll know that APP fraud is probably one of the fastest growing types of fraud out there. We don't see that. We kind of see a mixture of first-party fraud and third-party fraud. So, first-party would be no intent to pay, right? So it's a genuine customer with a genuine credentials.
So it's a bit like friendly fraud, isn't it?
Friendly fraud, you've got it, yeah. And then we see third-party fraud as well. So that could be something like synthetic ID, getting card details and stuff like that. So as a business and as a bank, we're regulated by the FCA and the Prudential Regulation Authority. We have all of the right kind of systems in place to help us protect fraud. But, like the topic of the discussion, right, is achieving seamless payment systems. I think, it's very, very difficult when conversion's king. You're never going to get to like 100% conversion because fraud will always exist. I think that, working for a few companies that sold fraud solutions, the key is kind of minimizing false positives because that can really lead to then a bad customer experience because it's a genuine customer that's been identified as fraud. So I think that is a real area that you can double down on and find the right provider to minimize that segment of fraud or non-fraud as it is. But yeah, for us as a business, we're kind of cognizant of fraud, the different types of fraud attempts that are taking place. I mean, we're a UK bank, right? So we're not exposed to any of the kind of the different fraud strategies people have across Europe. But within the UK, we feel we're fairly good at keeping it at acceptable levels.
There's a lot of identity verification tools that are geared towards the UK, so there's a lot of data in the UK, so it makes it easier to verify, I guess. So
but there you also have to find the right ones, right? Don't bring the customer in a position that he needs to be too long in the onboarding process versus secure. So we have a worst case in our company or from the payment department wise, where we say this will never happen, but we see the customer with minus 10 degrees outside of a charging point with an empty car. And in that case, the onboarding process should not be longer than 20 seconds.
Yeah.
But opposite of this, it has to be secure. So we need the data, we need the right data, we need to know the customer in that case, but give him also the opportunity to charge his car.
Yeah.
So
there's a lot of risk absorbed. Yeah, go ahead.
The most successful approach we've seen from customers is, I mean, you can force everyone to IDV, and it's going to be a highly frictionful, sort of bad experience for everyone. The best approach we've seen is the company, the provider, will have to absorb that complexity, right? So that is essentially what I feel like Zopa was describing, right? Like, we take on the complexity, we figure out how we introduce dynamic friction. If they are using an alternative payment method, I might route them to a very different user journey, a very different flow. I'll tap into very different data sources. I'll compare very different routes. And so it's not on the customer to jump through hoops for me. I'll jump through as many hoops as I can as the provider. And then at the end of the journey, if I still need to do an IDV, at least I have the justification for it, right? But I didn't take the sort of the easy way out. And I think crafting these complex user journeys to reduce friction and then introduce friction dynamically, I think the only thing more difficult than that might be assembling IKEA furniture. But it is a genuine challenge.
Yeah. They've actually improved some of the stuff. The cupboards are like no bolts, no screws. You just fold them out now.
No. Well, we are in a fortunate position not to have a lot of fraud, but we suffer sometimes for false positives and declining customers that we may could have approved, right? And then you're actually like, you're not dealing with fraud, but you're dealing maybe with dropping conversion that otherwise could have led to a sales. I think that can also be a big problem.
Yeah. In terms of what Checkout is seeing, I'm also a consultant, so I look at payments a lot, and mostly probably because of my iGaming background, I always tell people to have a contingency and to split their checkout. And that's something people are adopting, especially in the e-commerce space, because I think historically people thought, oh, we take cash, and so online that means card. And so everybody would just take card and think, that's it, I've got my business, I've got till I take cards. But now I think what's happening is like merchants are realizing, actually, it might not be the most cost-efficient, quickest, or the most desirable way for my customers to pay. So what trends are you seeing in terms of alternative payments, I guess?
Yeah, I think we have to put, and that's why countries, jurisdictions are very different. After a lot, there's different types, and I think it's very important is the time for delivery of the goods. So obviously, if you are Netflix, you want to use your Netflix accounts immediately. You're charging a car, you're paying your fee. IKEA, you probably pay, you receive in 1 week, 2 days, 1 day, it depends. And I think it gives times for merchants to analyze and say, should I ship? If you're, for example, Farfetch, and you're going to give like a gift of £5,000 and your margin is not much, or even negative margin, like if your fraud is one of the most important element of your company. For example, PlayStation is one of the companies that you can use the game immediately, you can pick the card. Like every merchant has different fraud. One thing that we've seen is we think open banking and A2A customers, for example, Pix in Brazil, has a lot of fraud. Like customers.
Open banking has fraud.
Yeah, open banking has a lot of fraud, and I think a lot of elements is that the customer might lose the money immediately, and then you can't do a chargeback. One of the most beautiful things of Visa and MasterCard is you can do a chargeback as a user. Like you have a flight tomorrow and it gets cancelled, you know, am I protected? Yes, because I can do a chargeback, and at the end of the day, it's either the companies or acquire or Visa, MasterCard, they'll pay the bill. And I think customers know that. So in terms of fraud protection and new payment methods, I think the Bizum in Spain or Ideal is quite old, or Pix in the future will gain more and more traction because companies will figure out what is the fraud and how to optimize it. But we still see it really much depends of the jurisdictions and which country you are. In Germany, we see very low fraud. In France, you see much more frauds, even depending on multiple payment methods. So that's how we help our customers. But a lot of it is a real talk with the merchants. It's like, hey, what percentage you actually want? Because some want zero fraud, nothing, which we know it's nearly impossible because it means you've canceled a lot of friendly fraud. And that's how you discuss. You want 5 basis points, you want 10 basis points, and it's much more a work with them. It's like how much you want to let through. But at the same time, as an acquirer, we also have regulations, and we have SCAs and TRAs. And like if we're above a certain amount of fraud, then we lose a certain threshold for 3DS. So I think it's a real partnership between fraud providers, merchants, and acquirers in all this.
Yeah, I think ultimately what's happening is that seamless payments is not what we thought it was going to be. Yeah. We thought it was going to be one click. And
the Amazon way. Everyone
Amazon really
Amazon
tried,
like
and they even sort of backed out of that very quickly because they realized they didn't fulfill all the requirements for data checking, or they didn't have enough steps to collect the data from the device and stuff. So I think ultimately what's happening is seamless payments is becoming optimized payments. So it's the right payment method for the right audience, for the right market, right? So what are the considerations you're making when selecting your checkout or optimizing your checkout, or thinking, okay, I'm good, I'm settling? Like for example, IKEA and are you part of Volkswagen Group, right? Because you said LV. Is it LV?
It's we are Volkswagen Group Charging, and our own brand
so
is
it's
calling
one of the brands.
Ellie. Electrify Life.
Yeah. So are you guys just happy with card payments for now? Like what are the considerations you're making for any additional payment methods?
I have something in mind which I called my happy land, and in the end of the day, when we achieve this happy land, hopefully we can offer the customer 5 payments in Europe, 3 of them pan-Europe. So one is two are saves, PayPal is credit card, and then some other stuff, and we hold 2 places open for local payment methods.
Okay, so you are considering open banking.
Yeah, that we can offer to the customers the payments they, in the best case, know from
But you
their
just
own.
need to sort that friction around, because I didn't actually know that subscription payments could be reversed so easily.
More or less. So in a SEPA way, you can release a chargeback very soon. In a credit card way, you have to call your bank. The bank is requesting this chargeback, then we can defend it and something like that. And in most of the cases, we win our chargeback because we deliver something like hardware, like energy, like everything, and we can, with a proof of deliver or proof of charging sessions, then we are done with the chargeback and win the chargebacks. But in the SEPA way, it's totally easy to release a chargeback, call your bank and say, I want my money back, done.
No questions asked.
No.
I think in direct debit, you have in the UK, you have 2 months to cancel whenever you want. So you can go and like go to the gym, not pay, and then just cancel it. That's one of the issues with a lot of part. They rather push cards.
Yeah, and in SEPA ways, it's 30 months. So I was sawing. Before I met my wife, I had a girlfriend, another one, and we had together an insurance. And I forget when we split off to cancel this insurance for both of us. And 13 months later, 12 months later, I see it on my bank statement, and I call the insurance. I say, what is it? Yeah, that's the insurance of you both. And I say, oh, can I do cancel this? Yeah, sure.
Oh, wow. Okay, so they'll even backdate it. Probably not something you
Easy.
want to advertise. So there's something that has to change, probably even in the terms and conditions, because I know that card schemes are trying to enable open banking as well. So they want it to be a bit more user-friendly. Do you guys use it in the Scandinavians? Because that's where it's really well established.
Yeah, so typically the branded versions, Swish, FIPS, are typical, the payment methods in the Scandinavian countries that work very well. I think they're based on maybe similar technology, but they don't have all the same pros as open banking may have. But definitely when it comes to the checkout process, there you see that it has the benefit. It's also related, of course, to the way customers like to pay. So they like to pay directly from their bank account because that's where they get their salaries on. So you're having a lot less benefit from just offering credit cards. So that's what you see in a lot of Western European markets, of course. Probably not saying anything new here, but for us, also what is important is the context of the payment itself. So if you're buying a hot dog in our restaurant and you're using the online version for that, you most likely are not going to use buy now, pay later option. At least that's not what we want you to use, so we don't offer it. But when you buy a kitchen, you might want to look at financing options. So just offering the right payment methods at the right points, and I think that's something you said already, that I think makes a lot of difference as well.
Yeah, because there has to be friction. I mean, around data collection, embedded finance, there's a lot of data collection. Like, you can try to optimize it as much as you want, but legally you have to collect certain information to be able to offer essentially a loan, isn't it? Because we call embedded finance, it's a loan, right? It's a bank loan.
Yeah, I think that, embedded finance is kind of retail finance 2.0, right? It's a kind of...
Is it easier than a loan? Is it like a lighter version of a loan? Like
So in the UK, because we're a UK bank, we don't trade in Europe, as I said, everyone's regulated by the FCA. So therefore, it kind of creates a baseline of kind of expectation on how everyone should behave, right, when they're creating their systems or interacting with their customers. And for us, I think the key for us is how we can get the best customer experience while staying within the regulation.
Yeah.
And to your question just then, you can either have a unregulated finance product, which is kind of the realms where Klarna and ClearPay have been playing for quite some time, and then you have a regulated finance product. And that only came in actually about maybe 10 years ago, where they split it out between unregulated and regulated. But and that was to drive more competition in the marketplace and allowed people like Klarna to come in and create better customer experiences for those low-value purchases. But for us, we'll dynamically kind of shorten the journey if it's an unregulated flow, because we know we need to ask fewer questions. Potentially we might not need to do affordability checks, but actually, we like to keep our flow quite dynamic.
Yeah.
So if we don't need to collect that information, then we won't, so the customer can speed through checkout as quickly as possible, right? Because there's, on the customer side, they want convenience. You hear a lot of talk about this kind of demand generation. People want immediacy. People are scrolling through TikTok these days, and they've got an attention span of about 10 seconds for every video, right? So the same applies when the younger generations are shopping. So we don't want to create too much friction at the checkout. But at the same time, we need to be cognizant of our responsibilities as a regulated bank and lender in the UK and make sure that we're doing the right thing, not just for us as a business, right, so we can be successful in the future, but doing the right thing by the regulators, right thing by our merchants, and the right thing by the customers as well.
Yeah. We're coming to the end of our session. I don't know if the last 10 minutes is for the QA. I didn't actually look at the app because it keeps logging me out. But in terms of what trends you're seeing with merchants, Sion, sure. Okay. What kind of trends are you seeing in the payments market, like in terms of what merchants are going for, or anything new they're adopting? Because I don't know if people get experimental around payments. They always seem to go for need rather than innovation, which could, as a payments expert, I like the idea of innovation, but people always go for need, don't they? They need a card processor. They don't think, oh, let me experiment with this method. It could work out well.
Yeah. We are seeing there are two predominant trends that we've seen emerge in the last year and a half. One of them is trying to be as preventative as you can be, right? Like, how can you do pre-KYC checks upon a checkout, right? Like how can you craft your flow in a way where, again, like depending on the type of payment.
Pre-KYC checks, what do you mean? Like in
before
identity?
Before you would enforce an actual KYC flow, like an IDV check, because again, that's friction, right? How can you gather the most amount of data and have the most substantial journey mapped out before you actually ask your user to do anything that is additionally frictionful, right? Because everyone's used to inputting their email and phone. It's kind of funny that people don't even question it, right? But you ask someone to take a selfie, look left, look right, and show a number, and they're like, okay, hold on for a second there. So this is one of the things, right? Like how can you essentially front load that journey in a way that is not just preventative in terms of risk and fraud, but that it gives you so much data that you can craft a better flow. So that is something that we spend a lot of time doing, right? So some of our pre-KYC checks, as we would call it, we look at over 90 different social sites and your presence on it. Professional networks as well, because it tells us a lot about who you are as a user. So this is one trend, right? Like less reactive, more preventative. And the other one is the realization that organizationally, risk and payments, it really doesn't just live with the risk and payments teams, right? You need the product team to help and work with you. You need your marketing team not to burn money on funneling users toward a bad journey or an abusive journey in many cases. You need your finance team to be aware of all of these things, not 2 weeks after the fact, but right as it happens. And so this unification of flows, unification of technologies and platforms, where you now have non-risk, non-payment teams work on risk and payment tools, just so that you have a unified vision across the entire organization. That is something that we've been championing for a very long time, and it's genuinely good to see the entire industry make that shift.
Okay. As we're coming to the end, I just wanted to actually ask myself about what's the one, not payment type, but innovation in the fraud and payment space. Like we can start with checkout. Is there something that's sort of up and coming that you can see becoming a bit more of a substantial thing? Like we talked about open banking.
I think that's why we were trying to push for chief payment officers. For most companies should have a chief payment officers.
I think that's becoming
yeah,
quite
I
a
think
trendy job title.
I agree that a lot of teams all together, like payments is not just one person, as finance, as product, as engineering, as a risk, as compliance. And we see it more as an acquirer with many merchants, like you involved with so much discussions. That's probably the innovation I'll give because I don't know how much time we have.
I mean, it's an
is to have a
important
chief
one
payment
because
officer.
it's sort of like a hybrid person, that's sort of a finance person, but is also an engineer tech person, right?
Yeah.
And also focus on the customer, really, because that's all we do. We just worry about the customer's experience and needs.
Well, it's all about conversion. At the end, it's all about optimization of conversion rates at your checkout. At what cost? And then after, it's a finance or product engineer also. Yeah. That's where we see a bit more. But in terms of innovation and different is, I see, and Swish is a good example in Sweden. I see Bizum in Spain, more and more governmental payment-led initiatives that,
What do you mean?
like banking themselves. We see it, for example, in Saudi Arabia or Mada. And Carte Bancaire has been a long time. A lot of countries want to build domestic rails of payments. And don't want to be necessarily dominant by 2 big companies, Visa and MasterCard, and they want to build their own rails in case, I don't know, anything happens, a war, etc. The world is not an easy place right now.
This is quite interesting. I've actually noticed that myself. I've thought that there could be some kind of instability and it could actually,
cross-border will always
online.
be complicated. There was always co-branded card with Visa, MasterCard, or JCB, but much more. We do see every country one by one building its own card networks. The UAE is doing
card networks as in like the scheme?
Yeah, scheme, a local scheme, to be able to have their own data sovereignty, because at the end of the day, all the data going through Visa, MasterCard goes to servers elsewhere that is not sovereign. And we do see, you see it in India with UPI, you see it with Brazil with basically all the BRICS countries are actually building their own ecosystem, payment ecosystem, and I think there will be much more innovation coming to that. What is the cost and all that, I think, is a different story. But I think there will be much less dominance into 1 or 2 or 3 companies in payments, but much more domestic. And it will create even more bigger complications for B2C company because they'll have to integrate everyone.
It will need a lot of intermediary companies for cross-border, right? But it seems to be a trend. Like we were trying to sort of consolidate all payments. Now we're trying to split it and hone it down to detailed versions, like, you know, alternative payments, country-specific, etc. So that actually makes sense.
Maybe it's the world. It's not. We're not going to enter
We
politics and all
then
that.
we
But
go back
I
in.
think globalization and nationalism. I think a lot of companies, countries just want to like control the funds and the revenue even within, because there's a lot of money to be made in payments and they want to control it.
I can see Angela has descended back. So I wasn't sure if we had the 10 minutes for QA or that's the end of our session.
No, I'm afraid that's it now. We're into a break. We have half an hour's break now, so you know, do get refreshments, revitalize yourself, and then when we come back, we have a session on advancing social media and live commerce. But thank you very much, guys. Very engaging.
Thanks.